The one thing I'm seeing a lot of right now are flippers that bought basically hoping the market would go up, and it's not going their way. So it finally happened. We're in a buyer's market. Are all these people that have been sitting on the sidelines going to step in now and buy? We even had a big drop in mortgage rates recently. Let's take a look at the market stats. I'm going to show you a property on Zillow and how people are still overpricing their homes while we go through this price adjustment period. One thing we know, inventory is up, days on market is up, sales are down. Hey everybody, welcome back to the channel. In today's video, we're going to give you a Phoenix market update. My name is Michael Smith. I'm a real estate agent in the greater Phoenix area, Scottsdale and Paradise Valley. We just had a sale this week on a home that was listed originally at $2 million in Scottsdale, and my clients ended up getting the home for $1.7 million. We're seeing a lot of price reductions throughout the valley. The big question, are buyers going to step in now? We're going to take a look at the 30-year fixed mortgage and some market stats right now. The first thing we're going to get into is some market stats from January. In January, residential home sales were 4,592. Median sales price was 450. Average sales price was 617. And that includes all the luxury homes, and that's what skews the number. And the average lease price was $2,329. Now, a couple of big stats that you have to look at when you're going into a buyer's market is days on market, which if we go in here, and this chart's got a lot of data, but just to give you an idea, 2 years ago we had 17,000, let's say 18,000 homes on the market. Today we have 27,240 homes. Under contract is actually pretty similar. 2 years ago we had 3,200. Right now we're at 3,300. It is slightly up from a month ago, which was 2,900. The other thing we got to look at is listings under contract. You can see 2 years ago we were at 9,000. Then right now we're at 8,175. Again, we are up slightly from the last few months, and that's probably because interest rates have fluctuated a little bit. Sales per year, you can see 2 years ago we were at 80,000. The year before we were at 72, and right now we were at 71,000. And another thing that people always care about is appreciation. 2 years ago we were down 4.4%, and that's when the interest rates started going up. Before that we were at 7%, and right now we're averaging 7%. And again, that's all over the board. It depends on the house, the remodel, what condition it's in. The one thing I'm seeing a lot of right now are flippers that bought basically hoping the market would go up, and it's not going their way. Stick around to a few more minutes and I'm going to show you an example. Right now we currently have in Phoenix, and this is just the city of Phoenix, 2,524 homes actively for sale in the greater Phoenix area. Now this is just the Phoenix market. That doesn't include all the suburbs, but these are 3-bedroom, 2-bath homes in Phoenix. If we look at the total market right now, as of today, we have 24,686 properties on the market. That's the total market, including condos. Now, this is the big thing for most buyers right now are these interest rates. Look back in January of 2025, we were at 7.26%. Right now, we're sitting at 6.74%, where a year ago, we were at 7.1%. So we'll see now if buyers will come in off the market, and we'll see a little bit of a rush back into the market. But this home I want to show you right here, this is a classic example of a home in Phoenix. Right now, this home, you can see it's been nicely updated if you look at it. It just recently had a price cut. It's listed for $484,999. It's a 3-bed, 2-bath, 1,676 square feet. Now, it's on a small lot, but that's not a big deal for some people. It's more about affordability on the house and depending on their commute. It's in a good location. It's right near the 51 freeway for travel, for getting to work and stuff, in location within the Phoenix market. You can see the Z estimate showing 482,100, the estimated range 458 to 506. Rent estimate 2278. Now what I like to look at is the price history here. So first thing I want to do is I go back as far as I can, and I can see back into 2022 that this home was listed for sale at 490,000, which was up from its previous sale of 439,000. Now look at this. August 1st of 2022, they sold the home for 439,000. A month later, I mean 1 month, 30 days, they were asking 490,000. Now that's when the market was crazy. I don't see how they could have done many improvements, if anything, maybe painted the home between the two time frames. But now we get back up into more current. So let's follow from 2022 and look at this home. So it was listed for 490 in 2022. They kept adjusting the price, they kept adjusting it down. They still hadn't sold it, and then they took it off the market right here in March of 2023. So that home was on the market for a long time, and you can see they had numerous price adjustments. Listed it back for sale for 454,000. They got it under contract for 454. It was pending, and then it came back on the market. So you can see then they dropped the price 6%. Then they went into another pending sale. So they were pending before at 454. Now they're pending at 325, and this is still in 2023. Then it ultimately sold for 417. Now the people that bought it came in and did a remodel. They put it back on the market in August of 2024 for 549,000, up 31%. By the end of the month, they were already getting a little nervous on their price. They dropped it to 519. Now you can see they took the home back off the market. They may have put a renter in there. Who knows what they did? Or maybe they decided to do some more improvements. Then they took it off at 519. They put it back on at 527,000. Now they took it back off the market again. This is kind of strange. Then they relisted it 10/25 of 2024 for 530,000. So they raised it another $3,000. Now we're into the end of 2024. They're at 529. They're at 519. Now they're down to 505. They take the property back off the market again, most likely for the holiday season. Now they put it back on in February of 2025 for 489,000, down 3% from the last listing. Now they're down to $484,289 per square foot. So this right here is a classic example of what we're seeing right now. People are overpricing their homes. Some people are going out and buying these homes, doing a lot of improvements and trying to get the home sold to flip at a higher price. I was at a neighborhood for a listing appointment the other day. On the street of the listing we were looking to take, there were two homes for sale. Both homes were purchased for around $1 million. About $250,000 went into each of them for renovations. They started out their prices at $1,450,000, and now they're down to $1,250,000. So I know they're losing money at this point, between $50,000 and $100,000. And the busy season for that neighborhood, meaning the snowbird season, the winter season, is coming to an end. We're seeing a lot of that right now. The sellers are getting educated right now that they need to take a look at their price. They can start out a little bit higher, but if they're not aggressively dropping their price to get it to the market value, they're not going to sell the home, and it's just going to sit on the market. Days on market have gone up substantially, and it will continue to happen if people don't price their homes right. Thanks again for watching. Don't forget to take a look at our website at www.soldbysmitty.com, and we put out a new blog article every week. Have a great day.